Charlie Munger, at 98 years old, possesses a wealth of knowledge and experience in witnessing various economic periods, including the brutal inflation of the 70s, the low inflation of the 60s, and even the great U.S. deflation from 1930 to 1933. Given his perspective, Munger expresses concern that the current inflationary period may surpass the challenges faced before Paul Volcker's intervention in the 1970s. Welcome to Fin Academy. In this video, we're going to talk about Charlie Munger's investment wisdom. We'll share practical examples that demonstrate how his advice can be applied in the real world of investing. So whether you're a beginner or looking to enhance your investment strategies, this video is a valuable resource. Make sure to watch the entire video to gain insights that can help you on your investment journey. Let's get started. Investing strategies during a recession. Navigating economic recessions as an investor can be challenging, particularly during inflationary periods with steeply rising interest rates. Holding cash is not ideal due to the erosion of its value, while investing can be difficult as the Federal Reserve restricts consumer spending and borrowing for businesses. Even Treasury bonds offer limited appeal. So what can investors do to mitigate the negative impact of inflation and make sound investment decisions during a recession? Besides owning quality equities, investors may need to assess the available options and choose the least unfavorable among them. This is a common approach in decision-making. Charlie Munger, for instance, holds Berkshire stock, Costco stock, Chinese stocks, a stake in Daily Journal, and multiple apartment houses. While not perfect, this strategy reflects the wisdom of not excessively diversifying investments. Munger suggests that having 4 good assets is fortunate, and attempting to manage more than 20 can be challenging and may lead to diluted performance. Munger's advice highlights the importance of focusing on a select number of high-quality investments rather than pursuing excessive diversification. During a recession, it becomes crucial to carefully evaluate investment opportunities, choose wisely, and concentrate on a handful of assets that show potential for long-term growth. Investing during a recession, particularly in an inflationary environment with rising interest rates, requires thoughtful decision-making. By selecting a limited number of strong investment options and avoiding excessive diversification, investors can position themselves more effectively to weather the challenges of the economic downturn. Warren Buffett's first rule. Charlie Munger's emphasis on choosing the least bad option resonates with Warren Buffett's first rule of investing, which is to avoid losing money. Check out our video on this topic after you finish watching this one. Investing during challenging market conditions can be daunting, and it's essential to recognize when the odds are not in your favor. Rather than chasing high returns, it may be more prudent to maintain a rational long-term perspective. In turbulent times, it's important to resist the temptation to force profitable outcomes. Instead, investors should remain rational, focus on high-quality equities, and adopt a long-term mindset. Charlie Munger tells us to look beyond the next 1 or 2 years and identify a handful of golden opportunities over an investing career. By staying invested in reliable assets and avoiding excessive trading, investors can achieve satisfactory results over the long run. Navigating market fluctuations. While short-term market fluctuations, including inflationary periods and recessions, can be unsettling, Munger reminds us that maintaining a collection of high-quality investments can withstand such challenges. The Berkshire Costco Chinese equities, Daily Journal stock, and apartment houses in Munger's portfolio may not be perfect, but they have demonstrated reliability over an extended period. Adhering to Buffett's rule of not losing money, investors can benefit from Munger's advice to choose the least bad option during difficult market conditions. By maintaining a rational approach, focusing on long-term growth, and sticking with a collection of high-quality investments, investors can navigate challenges and achieve satisfactory results over their investing careers. Remember, it's not about making epic trades, but finding a few solid opportunities and staying committed to the long-term journey. Adopting a long-term mindset. In today's media-saturated world, where stock market coverage and accessible statistics are abundant, there's a pervasive feeling that one must always be actively involved in the market. However, Charlie Munger cautions against succumbing to the allure of constant trading and instead advocates for a step back and a review of one's portfolio with a long-term perspective. Munger observes that some individuals treat the stock market as a gambling parlor, where transactions serve as the excitement of the game. However, there are also those who approach investing with the intention of securing their financial future. The merging of these two mindsets is problematic, as the stock market becomes a breeding ground for risky behavior. Munger suggests that if he had the power, he would implement a tax on short-term gains to discourage excessive speculation and reduce market liquidity. He argues for a divorce between the gambling parlor aspect and the legitimate capital development of the country. The current state of affairs, with excessive risk-taking and a focus on immediate gains, is detrimental to the country's well-being. Munger also highlights the dangers of prioritizing short-term gains over long-term stability. He compares the current market environment to a drunken party, where people are so immersed in the thrill that they neglect to consider the consequences. While some may be profiting from the chaos, the overall impact can be detrimental. Value investing principles. Munger's insights serve as a reminder that investors should be cautious not to fall into the trap of making impulsive decisions simply because they feel compelled to act. It is essential to adopt a rational approach and focus on long-term investment goals rather than getting caught up in short-term market fluctuations. The wisdom shared by Munger urges investors to resist the urge to constantly engage in trading activities driven by market hype. By adopting a long-term mindset and avoiding impulsive decision-making, individuals can navigate the market with a focus on sustainable growth and financial stability. By not being the gambler, investors can align their actions with their long-term investment objectives. Charlie's insights on stock crashes. Charlie Munger fearlessly addresses concerns about declining share prices, particularly those of Berkshire Hathaway. With his characteristic frankness, Munger sheds light on the nature of long-term shareholding and the mindset required to navigate market fluctuations. According to Munger, it is not uncommon for the value of stocks held over the long term to experience significant declines. He emphasizes that such declines, even reaching 50%, are part of the normal fluctuations in the market and should be anticipated by long-term shareholders. Munger challenges investors to possess equanimity, maintaining composure and calmness when faced with market price declines. He argues that those who are unable to react with equanimity to a 50% decline in stock value occurring 2 or 3 times in a century may not be suited for long-term shareholding. Such shareholders, according to Munger, may end up with mediocre results. His perspective serves as a reminder that stock market crashes and declines are part of the investment journey. By maintaining a long-term view and being mentally prepared for market volatility, investors can better navigate the ups and downs of the market. Munger implies that resilience and a steadfast approach are key to achieving satisfactory investment outcomes. Munger's candid remarks on stock crashes shed light on the mindset required for successful long-term investing. By accepting and even expecting market price declines, investors can develop the resilience necessary to weather storms and achieve satisfactory results over the long run. Munger's insights serve as a valuable lesson in embracing the inherent volatility of the stock market and remaining focused on long-term investment goals. Value investing never dies. Charlie Munger also emphasized the importance of staying rational, thinking long-term, and embracing value investing principles. By avoiding impulsive decisions and patiently waiting for opportunities, investors can navigate market fluctuations and capitalize on long-term value. Charlie highlights the timeless relevance of value investing. The idea of seeking more value than one pays for is the essence of investing. This principle, rooted in the teachings of Benjamin Graham, remains a cornerstone of successful investment strategies. Despite the emergence of market bubbles and past booms, rational, long-term value investing has withstood the test of time. Investors are urged to resist the temptation of making rash decisions, especially during challenging market conditions. Instead, the focus should be on holding a portfolio of high-quality businesses with strong competitive advantages and pricing power. By maintaining a long-term perspective and avoiding reactionary behavior, investors can wait for favorable opportunities to present themselves. Patience is highlighted as a virtue in value investing. By staying vigilant and patiently observing the market, investors can seize exceptional long-term opportunities when short-term focused market sentiment creates favorable conditions. This approach allows for a disciplined and measured investment strategy. Also, Munger acknowledges historical market bubbles and their subsequent outcomes, reinforcing the notion that irrational market behavior is not a new phenomenon. However, by adhering to rational, long-term value investing principles, investors can navigate turbulent times and achieve enduring success. The power of value investing, characterized by rationality, long-term thinking, and a focus on obtaining more value than one pays for, is underscored. This approach transcends market trends and remains a steadfast strategy for achieving investment success. By embracing these principles, investors can navigate market volatility and position themselves for long-term value creation. If you found this video helpful, please give it a thumbs up and share it with your friends who might benefit from Munger's wisdom. Also, if you want to see more content like this, make sure to hit that subscribe button and turn on the notification bell so you never miss an update from our channel. And for those of you who are just starting your investing journey or looking to expand your knowledge, we have a playlist dedicated to investing tips and strategies. Make sure to check it out. Thank you for watching, and we'll see you in the next video.